Good morning, everyone. Welcome to our Friday morning trading session, the end of another work week. It's actually a pretty good week this week in spite of the kind of choppy nature of the markets this week. All right, let's see what we've got going on here this morning. It looks like yesterday's session, kind of that seesaw action that we've been witnessing all week, the market falling a little into the open, a little bit of a rally, and then kind of recovering again by the close. The overnight relatively quiet, and here we are taking over pretty much from where we left off. Hard to get a handle on the sideways market, which way it really wants to go. But we'll keep a lookout and may have to sit on it for a little while before we see some follow through. Here the Raptors giving us a early mix of signals. Had a couple counter trend signals back into the hard edge. Here we're coming out with yet another hard edge signal. What time is it? Oh, we're only 3 minutes into the session. This is probably going to be an all right signal. Let me show you here, since we are in a demo room. Allow me to demonstrate. This is what we would refer to as a double pullback signal, and these tend to be fairly reliable. When the market moves into the cloud twice and comes out with signals, we call that a double pullback. And here we're going to show up with yet another signal. We've got the warning dots. Oh, maybe not. They're really bouncing around this 5780 area. Where do I know that number from? All right, so we got yet another hard edge sell. You could try to run this order deeper, but I think I'll just take the profit if I can get it. And this is, like I said, pretty early, especially by my standards. But it's also our first in-sync Raptor signal. I said I was going to follow that on the Raptor as we do on the Eagle. And hooray for us. It turned out to be a profitable little move to the short side right out of the gate. Okay, just making a couple notes here in my journal, bear with me. Okay, the market having a little bit of a bearish flare to it today. Well, so far, anyway. Put that one back up on the shelf. And I do believe we are trading near yesterday's lows now. Trade forecasts are saying we are in scalp mode, but moving into trend mode after that. Hopefully we'll see a little follow through. So yes, here 57.70, that's yesterday's lows. It's kind of that neighborhood that we're contending with at the moment. The market does look bearish on all four tools, so I would expect perhaps a little bit of a move lower from here. Here on the Geiger counter, you can see there was some pretty aggressive selling here for a moment. The Geiger counter pulling hard over, but we'll see whether or not we get any follow through from that. Or will it continue to be just another sideways kind of day? Crude oil tried to slip a few points lower, but they are also recovering. We're sort of on hold until things give us a slightly more defined direction. As I mentioned yesterday, when in doubt, you can always take a broader view of the market. And if you look at a long-term chart, and long-term for us would be a day chart. In just a moment, I will build one for you. Here's a daily NASDAQ chart. And you can see that overall the market in a bit of an uptrend, even though currently, well, it's more than a bit of an uptrend. Sorry, that's a correction. Obviously in an uptrend. We saw a little bit of a correction last week, and now we seem to be more or less in pullback mode. So yesterday's session, very, very neutral. I wonder if we're going to try to get down here, fill this little itty bitty gap. That guy right there. First, we have to take out the lows of the day. So the hawk now into yellow bars. Hey, way to go, Aspen. Aspen says, picked up that small Raptor 3 signal, or that Raptor 3 signal for a small win. Nicely done. All right, this is kind of, well, we've got a late filter entry working here in the Falcon. It hasn't produced yet, but we do have a warning dot. Trend line out of sync, now everything back into sync. We're going to produce the same signal here on the Raptor, which I will set up for. Now this is essentially a hard edge bounce as well. Technically, we only got within a few ticks of the hard edge, but again, you can't really split hairs with this kind of thing. Come on, get down there. I missed my entry by a couple of ticks as I was placing the order. Don't you dare tag me at break even after all this. They're just waiting long enough for me to make a couple notes here in my journal. Thank you very much. Okay, now you can go down to the profit target. Thank you. Thank you. It was very considerate of the market to wait for me while I scribbled a few notes in my journal. Excuse me. Oh, I was still in manual mode. I didn't realize that. Might have been able to pick up a runner on that one. Yeah, could have had a runner. Oh well, next time. The market definitely looking more bearish today than it has been. Here was our first in sync eagle signal, and you can see that one also falling off nicely and finding its profit objective. Now that we have found our high probability profit targets, we might see a little bit of a bounce, maybe. Oh, thanks, Aspen, reminding me of the new home sales report at the top of the hour. I don't think that's a real market mover, however. If you're looking for the big reports, the ones that have the potential to move the stock market, FOMC releases, of course, those typically occur on Wednesdays. not every Wednesday, of course, once a quarter or sometimes monthly, depending on how many meetings they schedule. And the non-farm payroll, which is another biggie. But honestly, other than those two reports, and even those, I wonder sometimes whether they're worth following. The fact of the matter is the markets are driven by the big traders. An interesting book if you're looking for a little summer reading. Let me pull it up here for you. Okay, I'm not sure why anybody would pay $167 for this book or $501. That seems a little bit outrageous. There you go. Pick up a used one for 27 bucks. This is crazy. I'm sure there's other listings available, but The Wall Street Gang by Richard Ney. A very interesting book about market manipulation. For those of you who have ever suspected that the market makers, the big professional traders, influence the markets, well, guess what? You were right. Maybe not in the way that you think. But for the most part, the markets are driven by the professionals, the market professionals. Andre says bad boys influence the markets. Well, they're not necessarily bad, but they're certainly not out to do you any favors. So our objective as traders is try to stay on the same side of the market as they are. Which is why we look for things like tests of the extreme, why we focus on our high probability signals, why we try to manage our trades correctly so that we don't strangle our trades, that we don't risk too much. And it's not that the professional traders are always on the right side of the trading equation. There's a lot of times, if you've ever looked at any mutual fund report or performance report, sometimes you look at those things and you say, I can do better than that. And you probably can. So it's not like the pros have the inside track on everything. Yes, Andres, I'm talking about the market makers, and Andres says there's times when they have to buy when the market goes down, and conversely, if the But the nice thing is when the market does go down, as a market maker, they get to set the price. So, if something catastrophic happened and all of a sudden there were no more buy orders, everybody wanted to sell, don't think for a moment that you're going to get 5769 as your fill. No, you may get 5700. You may get 5680. The market maker will fill your order, of course, but he's not going to lose his shirt doing so. But it's an interesting subject all the same. All right, so had a macro pullback signal here, unfolded a little bit too quickly, coming back with potentially another late filter entry on the Falcon here. So the late filter entry for you Falcon traders occurs when the filter goes out of sync and comes back into sync. However, the trend line never changes color. And you're going to see the trend line flattens out a little bit as this happens. Now, a late filter entry is similar to the macro pullback signal on the hawk in that we don't want to see it develop too many times. It's a very strong signal to be sure, but we don't want to see late filter entry, another late filter entry. You may get two within a trend, but unless the market is exceptionally strong, I don't think I've seen three. Okay, and now the trend line changing color, so that's going to spoil that late filter entry signal. It does look like we are getting an early trend change signal. If you're looking to be a little bit more aggressive on the buy side, this is an early trend change signal. And it's probably going to offer up enough to hit its profit objective, which would be here, just shy of 57.76. And the Raptor in turn may come back with a counter trend signal, the soft edge buy. That's the number 2 signal. What do we got here on the hawk? Well, we're into yellow bars, so that kind of nixes our signals there, unless you wanted to see this current pullback as a 4-arrow consolidation signal. I would not blame you for that. right, a little bit of an upswing. It does seem reluctant. Actually, they seem reluctant either way right now. They don't want to really go lower, and they don't seem to want to go much higher either. So I was on the lookout for the counter trend signal. Unfortunately, I looked away from my chart and I looked back and produced that counter trend signal. That's the soft edge buy. Target is the hard edge, so looking for a retracement back to around the 57.77 area. All right, pressing up here a little. So that early trend change signal here on the Falcon working out not too badly for us. All right, so a little bit of a struggle now as we approach the hard edge. I wonder if we're going to see 57.77 or if they're going to try to swing from here and head lower again. This would also constitute another hard edge sell. And I am favoring the short side today because that's been the direction the market has been paying off. I don't usually flip-flop on my trades all that much. You won't see me go from being a buyer to being a seller to being a buyer again. I think a lot of people that reverse on their positions, I think it's a dangerous strategy because the market is going to churn a little bit. It's going to move back and forth, back and forth. And you don't want to get in um, on a whim, I suppose. Because so if you haven't noticed, a lot of times the market, it may make a very quick move higher here. It may go boom, 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 like in a matter of a few seconds, rally up and give everybody time to hit their buy market button orders. And then all of a sudden what happens? Yep, it starts grinding lower and kind of resumes that overall trend. Sure, Tony. Tony says, Eric, I don't use fib levels, but can you please demo how to set up a retracement on the NASDAQ Hawk? Okay. Well, I don't think I would take the overnight into consideration. If you're trading the day session, I think you can pretty much use those values. Where's my drawing tool? Right here. Your Fibonacci retracement is F8, or you can just click on that. So that would be my high, and you would take it down to the swing low. And it looks like the market has bounced off the lows and retraced about half of the morning's down move. Fib levels, very interesting discussion in trading, but I think it's one of those rabbit hole things where you can kind of find yourself chasing fib level after fib level, trying to decipher where the market might go next. And soon your chart starts to look like this, and you can't make heads nor tails out of it. I know some traders who believe that in confluence of levels, like here you can see there's several overlaps around 57.70, and so they would say, well, that makes that a much stronger level. Well, yes and no. We're supported by 57.70 now, but it didn't do a whole lot to stop it moving higher, did it? I suppose everybody sees what they want to see. We are working a first macro cross higher. Again, I would be a little bit more inclined to be a seller today, but we'll see how it plays out. I see your point, Tony. Tony says, I was thinking that the other traders would be entering orders. Oh, sure. For sure there are. Traders will use any excuse to enter a market, but like I said, they confuse logic with trading. Fib levels are a good example of that. They say, okay, the market's made a 50% retracement. I'm going to short because the market has made a 50% retracement. I suppose it's as good as reason as any, to get into a trade. And I suppose so long as your stops are adequate and you're not foolish about any open profit you have, it's, probably moderately successful. I don't know. I haven't ever researched it. I do my best not to second guess the market. Yeah, Andres, I think you're being a bit of a wise guy. Andre said, Eric, did you try Elliott waves? I've tried it all. And to be fair, there's merit to be found in a lot of different trading practices, a lot of different trading theories. There's no question there's value in Elliott waves. The problem I have with Elliott waves is that very often they are easier to see in hindsight than real time. And hindsight doesn't help me very much. Like, I think most Elliott wave technicians will be looking at this as an ABC correction, looking for the market to fall off again. I am as well, but I'm looking for a hard edge bounce. I'm looking for the market to recover the downtrend. The problem with the ABC correction is it may develop into another 5-point wave. And then what? Then you have to try to decipher the next ABC correction. Stop it. You have to decipher the next ABC correction so that you can look to buy again. And this is all perfectly clear when you're looking in the history of the chart. You can say, oh yeah, I can see how that works. That's very clever. Mike Filigera, the fellow who uses the DTS system to trade stocks, I think he cut his teeth on Elliott waves because he knows Elliott waves forwards and backwards. Yeah, Andre says counting them is crazy, which is what I find too. He says Elliott waves are used by analysts to support their past theories or ideas. Yeah, I can see that. All right, so here we are. We are kissing the hard edge. We did trickle up to 57.77, just a little bit shy of that number. But we'll see if we come back now with another sell signal. And like I said, there's merit in almost all these things. Please don't think that I'm criticizing somebody else's way of analyzing a market. If there's one thing I've learned, the markets are extremely good at humbling you. So if you got to be careful going around boasting about what you know, because the market will show how little you actually know. Tony's asking, is Mike still online with DTS? He was doing a trading room last I heard. I've kind of fallen out of touch with Mike just because, well, life gets busy. Adam would be the fellow to ask. Mike, a very, very prolific writer. I've often wondered if he has one of these voice-to-text programs, because the man writes 3,000 words a day. I'm amazed he doesn't have carpal tunnel. Yes, I agree. Tony says he was an interesting man to watch trade. He has a very short timeline in his trading, and he will trade a couple dozen trades a day, and he does very well, to the tune of seven figures. Well, now mind you, he's trading a very substantial account, which helps. But he is no slouch, to be sure. All right, so we're just coming up on the underside of 5780, and we'll see whether the trades get knocked down again from here. Which I suspect they might. You know, I can see the potential for a larger test of the extreme before the market tries to wind up and head higher again. But I think it is significant that we've seen a break below yesterday's lows. And now we're slowing a little as we get into that hard edge. That first micro macro cross drifting a little bit, but reaching its profit objective all the same. All right, let's get back here to the Raptor. Don't want this one to slip past me. Come on now. They're stuck. All right. Broke this string of little lows here. Or am I going to get a sell signal, or do I have to just punch in? So we don't have the pre-signal yet, but we are into the hard edge. So, you know, you should be alert for these things as well. The signal prompts are there to help guide you, but they are just that. They are just guides. here the Eagle making a nice green bar sell, or starting to. And the Falcon drifting into what potentially could be a late filter entry to buy. We'll see how the market responds out of this whole area that we seem to be sandwiched in between around 57.74 and 57.80. A lot of activity through there. Come on, give me that short order. Anything else I can short? Well, I could set up to short the Eagle, I suppose. So we can anticipate that this bar is going to finish on the low. Can I cover above the high? Ooh, I can. It's a little rich, but the potential is there. Back now to the action on the Falcon, or the Raptor, sorry. I'm getting all my birds mixed up. The DTS chicken is still in development. Come on, where's that hard edge sell signal? Jeff says, I hope that was a joke. Yes, that was a joke. That was always the running gag when we were working with the programmers and stuff, that when we were developing names for the tools, or actually Adam, you can credit Adam with the naming of the tools, but we always said we should name one a chicken, the DTS chicken. I like it. Tony says the DTS chicken comes in 3 versions: fried, roasted, and barbecued. Yeah, that would have been something. One day I'll have to get Adam to share some of the war stories of the different names and stuff that he tossed around for a while. Oh, I've opened up a can of worms now. Peter says he could have a special tool called the wishbone. And Marlene says, I've had enough DTS turkey trades. Yeah, thanks, Prashant. Prashant says that was a good joke. Oh, they're not wanting to fall off just yet. I thought for sure coming into the hard edge, I would get a little bit more of a reaction. Floyd asked, no movement in the 30-year bond today. What causes it to move? Well, they they say the bond traders are the smartest traders in the world, and that's because, of course, every tick in the bond market is $31.25. So you cannot afford to be wrong too often. Even the big traders can't afford to be wrong too often. Bonds are driven really by interest rates, government news, anything. Anytime a bond trader thinks the government's going to have to adjust interest rates, that's going to affect the bond market. Now, with the recent FOMC report coming out, that was a bit of a non-starter. It pretty much gave the market everything that it anticipated. Oh, look at that. Big push up. All right, well, I can close that out then. So essentially, if bonds have an inverse relationship with interest rates, so if interest rates are declining, you can expect the bond market to go up. And if interest rates are going up, then you can expect the bond market to go down. The bonds will also move relative to the stock market, again, usually in an inverse type relationship. So if the stock market is going up and the bond market is not going down, then you may suspect that the up move in the stock market may be short-lived. It was for that reason that I used to actually watch the bond market relative to the YM and the NASDAQ. If I saw a move on the YM, that's mini Dow, and the NASDAQ, and let's say they were going up and the bond market was not going down, I had a pretty good idea that that move would not be sustained. Steve says, so far today I missed the move down and the move up. Ugh. Well, Steve, if nothing else, you're consistent, so you can take heart in that. I'm sorry, that's a bad joke. Yes, Marlene says, nice late filter entry signal here on the Falcon. You know what, folks? It is a very powerful signal. And it's sometimes a difficult signal to take because you look at this and you think, how can this market possibly go any higher from here? And sure enough, it does. Now, learning to trust your tools is really only something that you're going to gain from using them. I'm a big fan of, just grabbing your scroll bar at the bottom and just rolling back in the chart and playing the what if game. So you're looking at, a signal like this. It's a late filter entry signal. Just set it up like you would take it and play it out and see what happens and try to decide, okay, how would I manage this trade? Would I roll my stops at this point? Okay, I roll my stops and I get stopped out. what could I have done to, better my trade? Should I have been more aggressive on my stops? Should I have been more conservative on my stops? Maybe my stops needed to be down here. But these are really the kinds of questions that you're going to answer by doing, and you're going to gain a lot of confidence in your abilities and in your tools. Yeah, Paul says he likes to use the market replay. Market replay is great. Um, just grabbing your chart and scrolling back, is a very easy way to do market replay. And then you just advance it bar by bar. And like I said, you make a decision and no cheating. It doesn't help you any if you cheat. So you may interpret this as a cloud crossover signal. So how would you trade it? Would you set it up like this? Would you take the trade? And then just play it out. If you have the Profit Finder tool, of course, you can do some serious back testing and tweaking. Jake says he likes to back test a trading system for at least 100 trades. I've always liked that idea as well, because obviously out of 100 trades, the math is pretty easy. If 70 are winners and 30 are losers, well, then you've got a 70% system. The math is very, very easy. But I think the confidence that you gain is very important. Well, way to go. Prashanth says, I got my 20 ticks on the NASDAQ done for today. Well done. Aspen's asking me, Eric, how would you translate on the Raptor what you just explained? I believe it was on the Hawk. I don't have the other birds, just the Raptor. What was I talking about? I think maybe it was the first micro-macro cross signal here, or maybe even the macro pullback. The Hawk, or pardon me, the Raptor, because it's a hybrid, it has advantages and disadvantages relative to the other tools. Excuse me. One of the things with the Raptor is that it will often sacrifice quantity of trades for quality of trades. That's why, even though we get secondary signals, the high probability signals don't print all that frequently. So the Raptor is actually very strong on the counter trend signal, stronger than perhaps the other trading tools. But there is really no equivalent for the first micro-macro cross that we saw on the Hawk here on the Raptor. I suppose you may have interpreted this as an early cloud crossover. But that's about the best that I can offer you with that. I do know of at least one Raptor owner who runs two Raptor charts, one with the faster settings and one with the default settings. But again, your objective is not to generate more signals, rather to find a signal that you can capitalize on. This number 2 signal, by the way, was a signal that I intended to take, but by the time I got it, we were already up here. Yeah, so Asma says I'm happy with my 1, 2, 3s, so my signal prompts. They've produced nice, healthy profits, and again, that's of course the objective. You may end up getting shut out of the odd move like this, but again, the Raptor produced the signal, I believe, earlier than the other tools. The Raptor usually very aggressive on that counter trend signal, and yeah, we didn't get a green bar sell that we could have bought, or a red bar buy. So the Raptor a little bit faster actually than the Hawk, the Falcon, or the Eagle in picking up that counter trend move. Oh, right, yes. Aspen says I passed on that number 2 signal because it didn't meet my entry rule. I think you like to see it form above the hard edge, if I remember correctly. And that's all well and good. For me, so long as I have a trend and a decent retest, I'll still try the signal. Now, granted, this is an exceptional follow-through. I would not have anticipated a follow-through like that. I would have looked for a retrace to the hard edge. I would have been happy to get it. At this point right here, you see this big heavy bar? The market was trying to pull back, and it was trying to give us a number 1 signal. But you can see it did not manage the pullback. This bar here needed to go at least a tick lower, which I don't think it did, in which case we would have been prompted with a number 1 signal to buy. So occasionally the market just unwinding a little bit too quickly and kind of falling outside of the parameters. So everything that I said earlier about a bear market, you can pretty much toss out the window. It looks like we are back into a bull market, although a retrace here, perhaps again to the hard edge, would not be out of the question, I don't think. Yeah, pretty close, Aspen. Aspen says, surprisingly, swing and trend are tied on Forecaster. Well, swing mode ever so slightly more dominant, but only for another 15 minutes. Trend mode coming up hot on the heels of the swing mode. Jake says crude oil pretty much range bound, and you got that right. Big range, but range bound all the same. Very, very quiet in crude the last couple of days. Big day, of course, Wednesday with the inventory, but overall, crude a little bit of a snooze fest of late. If you're having trouble sleeping, just pull up a crude oil chart. Jake says, I watched three markets, the NASDAQ, crude oil, and the Russell. Is that too much? Well, no. If you can keep a handle on it and the market signals aren't unfolding so quickly that you start making sloppy decisions. I watch three markets as well, but my primary focus is always on just one. But my wife will tell you I'm not a multitasker. You got to give me one thing to do at a time. I can't do too many things at once. Jack says, I think you're smart keeping a simple focus. Again, it goes back to the idea that I'm not trying to find more. I'm not trying to find more signals. I'm just trying to find quality signals that I can take with a great deal of confidence. And this morning is a perfect example. We're going to pretend for a minute I did not miss this signal, but we took the number 3 signal here out of the open, hit our profit objective, took the other hard edge bounce right here, even though it was a couple of ticks shy of the hard edge, it still qualified. Hit our profit objective there. I intended to take this one, would have made my profit objective here as well. So I've gone 3 for 3, even if I was all in, all out, single contracts, that's still $300. After that, it becomes a numbers game, right? If I traded 2 contracts, well, all of a sudden I had a $600 day. If I traded 3 contracts, well, I almost had a $1,000 day, right? 900 bucks. If I trade 10 contracts, which the NASDAQ can easily absorb, 10 contracts, you're not going to experience too much slippage on that, especially early on, I would have a $3,000 day. So it's not, your task is not to find more, but rather to find the quality signals and be able to take advantage of them, to correctly capitalize on them. Well, we are looking at a major retrace here. All the way back up here to the median line. I did not see that one coming. I honestly, when I opened up the chart this morning and I saw the big sell-off from yesterday, I thought we are in a seller's market today. Nope. Jake says I'm a multitasker, monkey mind, bad for meditation. It's we're all different, of course, right? If you can manage it, then by all means. But I'm not really wired that way. This number one signal that we have finally printing is a little bit late. As I pointed out earlier, the number one signal was actually trying to print right here. It's not to say it isn't a valid signal, but where are you going to cover this trade? Right? You really got to consider at least to here. Well, okay, very least the hard edge. Second choice would be right here, and then ideally down here. Because to start, it's really hard to say where that move is going to be. Unfortunately, you probably, if you're like me, you're probably not going to be able to afford a trade like that. And trade manager's going to say, nope, you got to sit this one out. Alternatively, you could do a second push on the entry where you're looking for the market to, we've engaged the signal, we've retreated from the signal. You could probably get by with a tighter stop this way and looking for the market to bring you in on some renewed momentum. But I also think that I may be more comfortable looking for a little bit of a retrace, seeing how we were a little late producing our signal. But like I said, it's not that it isn't a valid signal, but maybe a second push entry is advisable. Floyd says, check out the mid-cap and the YM. I imagine the mid-cap made a very solid move, as the mid-cap is prone to do. Just a moment while I find it. Where did I put it? Oh, there it is. Yeah, so the mid cap a little bit more responsive with that number one signal. The number one signal kind of coinciding with the miss that we were looking at in the NASDAQ. Very good follow through from there. And the YM, I would imagine, did something the same. Wow, that's a very pronounced move there on the mid cap. Beautiful move through the overnight. Oh, sorry, this is the YM. Huh. The YM shut me out with the signals. That's odd. I see we got Falcon and Hawk signals, but no signal on the Raptor. Okay, back to all the action on the NASDAQ. Hey, way to go, Tony. Tony says, after patiently waiting, I got a quick little 10-tick scalp in crude oil with 3 contracts. That's the way it's done. Good job, Tony. All right, well, we just saw a big push higher, but where's the follow through on that? We're all the way back to the median line now. That's this gold line on the support resistance suite. So the market pretty well neutral. Well, they keep poking away here, but without any follow through. Jake's asking, what are your targets on the NASDAQ? 10 ticks. I now have 20 ticks with a 15 tick break even. In volatile markets, it works well. Otherwise, I get chopped out. I'm thinking back to 10 tick targets. Well, a 10 tick target in the NASDAQ is a $50 profit objective. That is a scalping target. Uh, Typically, 10 ticks is pretty easy to get. For the Raptor, I still run a 20 tick or $100 objective. But yeah, you're right. When the market is acting up like this, it's certainly going to be easier to get a small profit versus trying to get a big one or a larger one. And on that note, I think we're going to close up shop here for the day. The market seems to have ground to a bit of a halt. I would, if you're going to hang around and trade some more, I would anticipate a little bit of a pullback here, but the market does seem to be in full-on bull mode now after that strong rally. Don't think the buyers are going to, or sellers are going to be able to put the market into a tailspin, but a sideways market for the rest of the session does seem to be a very real possibility. All right, gang, have yourselves a wonderful weekend, and I will see you on Monday. We'll talk to you then. Bye for now.